Three former Chancellors have warned Rishi Sunak against increasing corporation tax next month. Philip Hammond, Kwasi Kwarteng and George Osborne joined business leaders and economists in the growing rebellion against Sunak's flagship policy. The main rate of corporation tax is due to go up in April from 19% to 25%. So I'm now joined by Elliot Keck, who's the investigations campaign manager at the Taxpayers Alliance. So, Elliot, thanks for joining me. 19 to 25, that seems quite a hike.
Well, great to be back on the show, Andrew. I didn't know you were so fascinated by corporation tax.
Love it.
It is, yeah, it is quite the hike. It's the first hike in corporation tax in 50 years. And the reason why it's so damaging is time and time again, economic modelling, including ours that was out this morning, shows that corporation tax is one of the most harmful, if not the most harmful, tax to economic growth and investment.
You've put a figure on this, haven't you, how much you think we might lose?
Yeah, so just from this increase in corporation tax, we think the economy will be £30 billion smaller by 2029 than it would have been otherwise. Investment will be £12 billion down, and average weekly earnings will be £7 a week down, so about £350 down,
and
compared to if we hadn't increased it.
How watertight are those projections, do you think? I mean,
so, like all modelling, it's obviously open to errors and changes, but what our modelling does, unlike other models, it assumes that changes to taxation changes people's behaviour. So many economic models just look at a cut to taxation or an increase to taxation and assumes that everything else stays the same. The problem with that is when you change taxation, it changes people's behaviour. If you increase corporation tax, then it means that businesses are less likely to invest in this country. It means they're less likely to increase the pay of their workers. They're less likely to cut prices. So our model basically assumes that there are substantial changes to people's behaviour as a result of changes in taxation.
Is there evidence, is there a history of raising corporation tax leading to the kind of behavioural changes that you're describing?
Sure. So when corporation tax was steadily cut from 2010 to about 2016, 2017, we actually saw receipts from the taxation, so the total amount of money raised from that tax, increased despite the fact it was cut. Now, there are many factors that lead to changes in receipts, but certainly decreasing corporation tax did not lead to a decrease in receipts.
So if you have all of this evidence and if you have all of these projections, what exactly is Rishi Sunak thinking? I mean, what is his justification for this?
Well, I think, to some extent, once you make a pledge, it's difficult to back out of. And when he came in, he wanted to show fiscal responsibility, which meant not spending more than you earned, and there was a range of taxation that was, pledged to increase and decrease. It turns out we now have a bit of a windfall because energy prices are going down. The government has more money than it thought, but nevertheless, Rishi Sunak is perhaps stuck in a sort of a dead end where he feels like he can't change his policy, but he has a real window to do so.
So why is that? Is it partly a reaction against Trussonomics?
Possibly, but I mean, what we saw this morning, it was really interesting, because we saw three former Conservative Chancellors come out against this tax rise, and all Chancellors are from a very different wings of the Tory party.
Yes.
Philip Hammond, George Osborne, Kwasi Kwarteng. This is not just the Trussites, this is really across the Conservative Party. They recognise that business taxes are very, very bad for economic growth.
And is it the case that businesses will just up sticks and leave if you implement these kind of things?
I think that's certainly the case. Yeah, AstraZeneca is one firm recently that have announced their about £300 million investment is going to go to Ireland instead of the United Kingdom, and they pointed to the United Kingdom's tax rates as a result of that. I think the key point here is we have a budget coming up, and this is clearly not going to be a tax-cutting budget. We all know that. But if there's one thing that they can avoid, it's having a tax-increasing budget.
Is it the case that Rishi Sunak can't change his mind now? I mean, we saw what happened with Liz Truss. Is it just the case that, as you say, he's sort of locked in now, he has to go with it and see what happens? Or might he reflect, given all of the things that you've mentioned?
I certainly hope he does reflect, because, what we're talking about here is we're not talking about some wild tax cut. We're just talking about keeping corporation tax as it is. And the UK has become a less attractive place in recent years to invest. And the one thing that we have going for us is we have relatively low corporation tax, and it'd be a shame to throw that away.
So where did Liz Truss go wrong then?
Well, Liz Truss went wrong in a range of ways, but it was clearly a very, very radical programme of tax cuts across the board that didn't come with spending cuts, and we criticised it at the time. We said that you need to have spending cuts along with the tax cuts. So I think she probably went too far too fast. But the problem with Rishi Sunak is he's overreacting against that former policy.
Elliot Keck, thanks so much for joining me.